Jon Williams here from Williams Financial Group and Manulife Securities. Today I'm going to be talking about tax-free savings accounts. It's a great vehicle for a lot of investors and it's very misunderstood. I want to briefly talk about what are the advantages of a tax-free savings account, who should be utilizing them, and ultimately what can you hold in them. So let's first off talk about what are the advantages of a tax-free savings account. Well, number one, any of the growth that happens from the holdings you have within a tax-free savings account are tax-free, just like it sounds like. That's number one. Number two, you also can name a beneficiary on a tax-free savings account, which means that this can help a lot from an estate planning perspective in transferring wealth between spouses as well as generations. So let's talk a little bit more about a tax-free savings account. It's 2014 and this year's limit is $5,500. Now, if you're a Canadian and you've been above the age of 18 since 2009, you have a cumulative maximum limit of $31,000, which is a pretty substantial number. Often we have families that are clients of ours, and therefore as a couple, that's $62,000 of money outside your RRSPs that can be invested and managed on a tax-free basis. So who should be considering a tax-free savings account? Well, depending on your scenario, actually, both low, middle, and high-income investors should be considering these for different reasons. A low-income investor doesn't necessarily get a whole lot of tax benefit from contributing to an RRSP because their tax rate may already be extremely low. And therefore, by contributing to a tax-free savings account instead can be a better tax advantage, although everyone's situation is different. From a high-income earner's perspective, if they're already maximizing their RRSP and they have non-registered investments, then utilizing the tax-free savings account will give them tax-free growth, therefore helping them out from a tax planning perspective so that they're not incurring perhaps interest income or capital gains on a non-registered basis. Now, I want to talk briefly about what you can hold because it's extremely misunderstood. Most people say it's a tax-free savings account, therefore it's a savings account, obviously, because that's what the name is. So a lot of investors in Canada simply have cash balances in their tax-free savings account and they're underutilizing this as a product. Tax-free savings accounts, in fact, can hold a number of different investments within them. A lot like an RRSP, and really the restrictions on them are very similar to an RRSP. So for instance, in a tax-free savings account, I can own stocks, I can own bonds, mutual funds, ETFs. Really, there's a wide variety of investment choices you can own within a tax-free savings account. And my belief is that a lot of investors, in my experience as well, simply just have their savings in these vehicles as opposed to having an investment vehicle that can actually earn them something substantial. If I invest $10,000 in a tax-free savings account into a vehicle that has potential for capital gains and I make $3,000 on that vehicle, that $3,000 literally is tax-free growth. I can take that $3,000 out of that tax-free savings account and spend it, and there's zero tax impact. So if you really understand that that's how they work, perhaps you should be doing something different with your tax-free savings account and really utilizing that tax-free growth. So thanks very much for your time today. Have a great day. And if you have any questions about tax-free savings accounts or would like a review of your investments, please feel free to reach out to us at Williams Financial Group.